Welcome to FlashStocks. I'm Enzo Orlando.
And I'm Nicholas Steffanari.
Our job is to provide financial advice tailored to your specific profile.
We, as well as you, are in the business of making money. We want to help you grow your investments off sound decisions with backed up sources of data.
And Nick, this week the market really had a big rally Thursday and Friday after it took a big dip on Wednesday. But hey, let's take a look at how everything performed.
Alright, getting into the NASDAQ here. The NASDAQ had a strong performance this week, up about 400 points, or about 400%. This was due to big rallies from Netflix, Nike, and Amazon. There was a 3% drop on Wednesday, but it rallied back on Thursday.
S&P 500, they had a similar course as the NASDAQ did. The S&P was up 110 points this week, about 3%, with a huge dip on Wednesday, but rallied back just like the NASDAQ did on Thursday. And the Dow Jones also went along a similar path as the S&P and NASDAQ. They were about 700 points, or 2.5%, with a huge dip on Wednesday, and then a rally back on Thursday and Friday. So now, Nick, we're going to look into what was the big stock of the week.
Alright, well, the big stock of the week right here, I think this is right. It's Amazon.
I agree with you. Amazon's holding.
Sitting right now at a whopping $3,289 a share, up about 5% or $142 this week. Amazon continues to outperform the market with its e-commerce businesses. The pandemic has proven that Amazon is the future of retail and will continue to be for years to come. This is a clear gainer for the future. Also, P.S. you can buy partial shares, so you don't need to buy a whole share just to own a stock share of Amazon.
Yeah, Nick, and I think the reason why you're seeing Amazon doing well this week is because coming up next week is that Prime Week, where all the Prime members can get special discounts and all that, and shipping items like literally the day they buy it.
Yeah,
so I think that's going to be huge for Amazon stock going into next year. I think they'll still be the top stock of next week too.
Yeah, I never thought about that. But getting into our buy or sell now, so this is where we pick a stock that we either want to buy or whether we want to sell. So getting into my short term, Alibaba. So this is sitting at about $299, up $10 from last week. This is a Chinese-based company, and by some degree, they are the largest e-commerce company in the world. They have hundreds of millions of users and host millions of merchants and businesses. This stock has been performing exceedingly well through the past few days and weeks. They have nearly doubled their net income over this past year, according to Yahoo Finance. So in my opinion, this will be a quick gainer in the short term.
Yeah, my short-term buy, I'm going to go with American Airlines. And even though American Airlines had to lay off 19,000 workers and had to cut out 13 cities from their flight schedule, their stock performed pretty well after the crash on Wednesday. But from CNBC, I heard more talks about having an airline relief bill have started back up after President Donald Trump halted the big stimulus bill on Wednesday and wanted to focus on smaller measures that included the airlines. As you can see, American Airlines had an impressive trend going up the past 2 days that has closed at $13.20 a share to close out the week. But the reason why I say it will be a short-term buy is that its projected revenue for the third quarter is going to be down 75% from last year and are still unsure of the airline relief bill. So a good buy to have for the short term, but I suggest you take your time to make it a long-term buy depending on how the stock will do.
You know, and I'm going to have to disagree with you there. Airline stocks, you know, in my opinion, other than Southwest, I feel are too risky to buy right now. I think passenger traffic is still going to be down for a long time until the COVID vaccine is widely available. I could see this as a potential long-term buy and wait out COVID, but for short term, I would have to pass on American Airlines. So now we're going to get into our long-term buys. So for me, I picked the company Tencent. So this stock is up about $4 from the previous week, which is a 5% gain. This is another Chinese-based company, a holding company actually. And for those of you who don't know what a holding company is, they basically buy shares of other companies to form one big company. So they do not operate in just one area. They do operate mainly in technology, but they own various value-added services like mobile gaming, fintech, and business services, which are cloud-based services, online advertising, and things of that nature. And this is clearly a stock on the rise for long-term investors. Looking at their 1-year track record, they're up about 75% or $30, which is huge. And net income is down 5%. However, I do think they will rebound, and this for me is clearly long-term buy.
Yeah, you're going very interesting with your buys, focusing on more Chinese companies to go invest in.
Yeah.
All right, with me, my long-term buy is Disney, and their stock performed pretty good this week, closing the week up 1.54% and trading at $124.98 a share. Their 2020 fiscal year ended on September 30th, and their total revenue was up $197,000 from last year, but their gross profit was down $2 million. With the coronavirus changing our world, Disney had to shut down their parks, which is a huge part of their income. But how they were able to have a year where they were able to have a higher profit from last year was with their streaming service of Disney Plus, and also not having to run the parks the whole year, which saved them money. This ended up putting Disney's operating income down, as it saved them about $5 million. Crazy enough to say that I think COVID kind of helped Disney in an interesting way financially.
Yeah, very interesting. So now we're going to get into our where we were right, where we were wrong segments. So Enzo, do you want to start us off?
Yeah, I'll start. Here's the thing. I was right on 2 stocks from our last show. The first one I'm going to start off is Spotify as a long-term buy, as their stock went up $10 from last week. Being the largest app of music and podcasts is the reason why Spotify has done so well, and having the option of picking out what the user wants to listen to is the big reason why so many people choose them. Then I was also right on Molson Coors as a short-term buy, which had a $2 gain from last week, but closed down to end the week at being down 1.87%. How I see this stock going now is, in the upcoming week, I see this as a sell since it has been trending down the last 2 days.
Yeah, and you got to admit, Spotify is able to track those Android users because their largest competitor, Apple Music, only applies to Apple-based products. So Spotify users are about double what Apple users are right now. So I got to agree with you on that stock right there. So I'm going to get into where I was right. So I'm picking, from last week, my pick was Peloton. This was a huge gainer this week, up about 15% or $15.71. The reason for this, in my opinion, is that people are still concerned about the pandemic and are buying at-home gyms rather than going to a real gym. So as I mentioned in last week's episode, they're still operating at a loss, but I do think this is a great short-term investment for at least until the pandemic ends. So getting into where we were wrong, unfortunately, Southwest Airlines actually did not perform as well as I thought it would. It's up only about 50 cents. I mean, they're not down, but they're only up about 1.43%. This is because the majority of the airlines were up this week. Delta, as I said last week, I thought this was going to underperform due to the weak financials, but it also rallied, gaining 50 cents just like Southwest. I do think Southwest is a long-term buy for when a COVID vaccine is widely available. They have good prices for their plane tickets and their air travel in general, but I think
And we are going to go into the best performing industries of the week. And we're going to be sticking with the airline industry. And after the market went down on Wednesday, Thursday we saw the stocks go up, especially with the airlines. As I mentioned earlier about how American Airlines performed, but the other major airlines like United, Southwest, and Delta had their stocks performing at a high level to close the week. The talks of an airline relief bill happening are the reason why the stock in the airlines have been performing so well. So we'll see what happens if one goes through. But more than likely, this will be the last time this year we'll see the airline stocks do well at the same time, because we are so uncertain in this world about bills for the relief for the airlines and just also the coronavirus too.
Yeah, you gotta admit it is a little shaky when it comes to their share price because we really don't know what the future is going to hold, when a vaccine is going to be made available, or if there's going to be any more stimulus for the airlines. This looked like it was the last stimulus bill. So now getting into our next segment, which is Flash Finance. So we understand that not many students have the money to buy securities in the stock market. So over the past few episodes, we created some easy tips in order to save money. So this week, it's calculate your purchases by hours. So when you decide to try and buy an item, if it's something worth buying, thinking of the cost in terms of how long it takes you to make that money. So this can help you get a sense of the true value of your money. If you feel that the hours you put in are not worth the product or service, then you are less likely to buy that product. And that's about it for me.
Yeah, that's it. And that's all we have for today in this episode of FlashCast. To keep up with the stock